Welcome to the John Trading channel. In this video, I'm going to give you my price prediction for AVAX Avalanche in 2023. Can AVAX break the old all-time high and make much higher prices in 2023? Make sure you don't go anywhere and you stay tuned until the end of the video. If you haven't already, make sure to leave a like on the video, make sure you're subscribed and leave a comment if you're enjoying these daily crypto videos. Let's do a really quick dive into what Avalanche actually does. Let's first look at the current market cap. It's roughly a $5 billion market cap and it's ranked number 15 out of 10,000 of all cryptocurrencies in the world. So it's the number 15th coin out of every other coin. Let's actually look what AVAX is about. Avalanche is a layer 1 blockchain that functions as a platform for decentralized applications and custom blockchain networks. It is one of Ethereum's rivals, aiming to unseat Ethereum as the most popular blockchain for smart contracts. It aims to do so by having a higher transaction output, up to 6,500 transactions per second, while not compromising scalability. So it definitely shows that Avalanche is basically an Ethereum competitor and they're trying to do very similar things, but Avalanche is able to do quicker and faster and perform better than Ethereum in some particular instances. When making a price prediction, the first thing I like to do is use the Fibonacci retracement tool. So I like to grab at this old all-time high, roughly at $150, and drag it down to this current low that's at this roughly $10 range. And you can see we get multiple price targets showing up. We've got the 0.382, 0.5, and the 618 Fibonacci levels, and also the 1-to-1 reaching at the old all-time high again at that level. So you can see these actually populate in the market using some high-grade mathematical equations, and it instantly shows one level that I'm personally interested. Right in this level here would be a personal level that I'm really interested to see AVAX Avalanche actually reach back in 2023. The reason being is you can see not only does this perfectly line up with the 382 level, you can see in this level we had support, and even since we're on the weekly time frame, if I was to show you on the daily time frame, we had another support level in here. But when I show you on the daily time frame, there's just too many bars and it's spread out too much to be able to show you in really clear detail. So I can show you much better in this area. So we do have this support level all in this area, and look what happened. We got a major breakdown to the downside below this support area. So once we have a really strong support area right here, and we get a strong breakdown below, it's then going to act as a resistance level. So what will happen when price actually comes back into this area and we see some upside travel in this area, we are going to see at least a small amount of retracement. The reason being is this is a support resistance flip. Initially a strong support, broke down, price made a really strong breakdown. It's then going to act as a resistance level, at least in the short term, when price reaches back in this area. But not only is this a support and resistance flip, it's also a level on the Fibonacci level. So it's that 382 level that a lot of traders like to use in the market. When price reaches 38.2%, they then look to sell back into the market, as well as the 0.5 and also the 618 levels. But in this particular level, we've got some confluence. We've got these support to resistance flips. We've also got a Fibonacci level lining up nearly perfectly on the support to resistance flip. So I would say anywhere in this area right through here would actually be my price target 1 for Avalanche in 2023. So if we look at our current price and actually drag it up into this box, it's roughly on the low end, roughly 270%, and on the high end, 350% away. So a really solid trade potential on this particular trade, and you would need to use the right risk to reward model. Particularly on this trade, you would probably look to put your stop somewhere in that area, but it would be a far level away. So it's obviously 20% away. And in my trading course, I'm always advocating to only risk 2 to 3% of your trading account on any single trade. So let's say you did want to take this account, but you needed to have that 22% risk. It would basically mean you can only take 1/10 of your normal position size. So if you trade a $10,000 account in the market, let's say you do trade $10,000 account, but you need to risk 1/10 of that, divide that by 10. You can only take this trade using $1,000 of capital. Reason being is once you have a 22% stop, if you divide that by 10, you would basically be having somewhere over 2.5% stops. You'd still be able to use 22% of $1,000, but since $10,000 is your entire trading account, you're actually only risking 2.2% on that particular trade instead of 22%. So that's how I personally trade. Again, I'm not recommending it. It's something that I teach in my trading course, but it is not financial advice. The next level that really interests me on Avalanche is actually between this 0.5 and 618 level on the Fibonacci. This 618 level is known as the golden zone of the Fibonacci and is one of the most powerful tools you can use using the Fibonacci retracement. 618 is known as the golden zone, and I'm just going to quickly delete it off my chart, but you know right where it is in this area here. So let me delete the 618 so I can show you a little bit better. In this area here, you can see that we had a support level. We had support in this area. Support. We also had another level of support all in this area right here. Then look what happened. We got a major breakout to the downside, and then look what happened. Price came back up, retested this support level as resistance, failed to the downside, came up, retested this level as a resistance, because once support level gets broken through to the downside, it's then going to act as a resistance level. So we got a retest in this area acting as resistance. We got another retest in this area acting as resistance. And then we had a major drop to the downside, over 85% in less than 1 month. So we had a major downwards move on Avalanche back in early of 2022. So you can see how we had this really strong support to resistance flip. Once a really strong support level does get flipped in the market, it's then going to act as a resistance level when price comes back to retest it. So you really need to understand, as much as it might seem simple that it's just a support to resistance flip, I'm telling you that if you backtest this strategy across every single market, across every single asset, you'll find that it works extremely well. But not only in this area have we got the 618 level, we've also got that support and resistance flip. But not only have we got the support and resistance flip and the Fibonacci level, this is basically at the old all-time high, and there will be a lot of resistance at this level because, and reason being, is even in this area right here, there were a lot of traders that actually bought in this area. Reason being is once they saw this decline in this area and begin supporting, they were expecting that price was going to go above the old all-time high and break out above this $150 level, potentially go to $200, $300. That's what their price target was. So in this level right here that I've circled, people are actually buying the highs of these bars. A lot of people right now in their portfolio of Avalanche actually own Avalanche at this particular price, up at this $100 level. And if you look right now, Avalanche is roughly at $13. So they've been holding for that entire decline. And what's going to happen when price eventually comes back into this area, these people are basically going to be praying, saying, thank you, I'm finally able to get out of my trade break even. They're going to be looking to get out of their trade in this area at this break even level, not only lining up with the 618 Fibonacci, also lining up with the old all-time high, also lining up with this support and resistance flip. And that's what I'm looking to do in trading. I'm looking for multiple confluent zones to actually get out of the market. I'm not just looking for one particular strategy just by itself. Let's just say we just use the Fibonacci retracement. That in itself doesn't give you the highest probability play. When you can line it up with these support and resistance flips, when you can also line it up with the old all-time high, and you line it up with these Fibonacci levels, that's when I have, oh my God, I got 3 confluence levels all telling me in the exact same spot for Avalanche that we need to then look for that downside momentum. And when I see these confluence zones in the market, that's what actually gets me most excited to begin looking to get into my trade, because I got multiple different traders using completely different strategies, all looking to enter in the same position at the same price in the market. So we've got this second target right now. If we drag it up from this $13 low that we're currently at, you can see that's roughly 550% away for our second target. So using that into our risk to reward model, let's even give this the worst case scenario of only being able to happen 30% of the time. 30% of the time, we're going to go from $13 all the way up to this 556% profit target. So you plug in roughly that 22% stop loss that you need to use. Plug that in using a 550% reward target, you would see that's basically 20 to 1. That's over 20 to 1. It's actually close to 30 to 1 profit factor. So you're risking 1 to win 30 in the market, which is nearly unheard of. It's very hard to find these profit factors of this potential level. And if you find the trader's equation where you need to plug in the rough chance of you winning the trade times by your risk to reward strategy, even if we give this the absolute low of only occurring 30% of the time in the market, we get a massively positive trader's equation. And that's what you need to be doing on every single trade. That's what I teach in my course. If you don't have a positive trader's equation, you are gambling, because it means if you were to take this exact trade over 1,000 times and you don't have a positive trader's equation, you will guaranteed to lose money. Whereas if you have a positive trader's equation, you can find this exact trade, you're taking it 100, maybe 1,000 times in your entire career, then you might not win this one. But if you just win 1 out of 10, you're going to have a 30 profit factor and a 1 loss. So it shows that using the trader's equation, having an exact risk to reward with a rough win percentage on that strategy is really going to help you in your trading. And now for my third and final target for AVAX. What I'm actually going to do is use the trend-based Fibonacci extension tool and actually bring it to this low here that happened in early of 2021, January of 2021. So I drag it from the low, I drag it all to the all-time high at this rough $150 range. Then I drag it to this current low that's happened in 2023. Then that's at the rough $10 range. And you can see we get multiple price targets in this area. So we've got the 0.382 lining up with our target 1. Then our target 2 is right in between the 0.5 to the 618 level, which perfectly lines up with these support into resistance flips that I'm extremely excited about. Then we've got our third and final moonshot target, which is actually at the golden zone of the trend-based Fibonacci extension. At this 1618 to 175 level is known as the golden zone, and it actually would be a perfect level for AVAX to eventually break above this all-time high, because if we believe that AVAX is going to break above the all-time high, roughly like it did in this area, you can see how much we went above. We went roughly 140% above the old all-time high in the last bull run. And if we drag to here, you can see that's roughly half the average move, which actually happens every single time we get a new all-time high. It slightly decreases and decreases. But from our current price, if we actually drag the current price up, drag it all the way up, that's roughly 180%, 1,800% away. So that's a perfect profit target in the market, especially if we do believe it can break the all-time high. And I do believe Avalanche definitely has a chance to break the old all-time high. But the hardest part about using this price target is it's not based on any support and resistance flips, not based on the old all-time high. It's only based on a trend-based Fibonacci extension, which it's not a high confluence zone. Reason being is we've only got one strategy telling me that in this area would be looking to sell at a decent price, but I haven't got multiple strategies all showing me that this would be a good price to actually get long until the market and then look to exit out of my trade. And that's why I don't really prefer looking for all these moonshot targets. I prefer to look at these targets, especially through here, that have a really solid profit potential, but we aren't aiming for the moon because we've only got this one confluence level in the market. We don't have multiple confluence zones telling us that roughly 1,800% away from the current price is going to be a good place to get out of the trade.